G'day, welcome to Breakout Wednesday. It is August the 28th, 2019. It's currently about 9 p.m. Perth time. I did have the talk ready to go super early this morning, however, I proceeded to lose the video somehow, and I apologise for that. This is the first chance I've had since then. So, look, the markets over the last week haven't really done anything. They've just been churning sideways. The trade talks between, obviously, Trump and China is going on and on and on. There's a lot of indecisiveness, uncertainty out there, and as long as that hangs around for, then we can expect sideways markets. And so I think everyone's pretty fed up with Trump, his tweets and all the crap that comes with him. And I don't think the market's really going to start trending up again until something gets resolved there. And so, for a breakout trader, momentum trader, swing trader, position trader, whatever you want to call it, it's the time for being patient and just being in cash is upon us. I have no problem being 90-95% cash. The trades I'm taking in terms of position swing trading are really in cheaper penny dreadful type stocks. In my long-term account, obviously, I've discussed in other weeks, I'm making some long-term investments in ETFs and certain stocks like the CBA and that sort of thing. However, in the shorter-term momentum account, I'm pretty much in cash, bar a few tiny penny dreadful trades in really low cap stocks that aren't really correlated to the market. The Dow can be taking a huge dump one night, and the next day these little tiny penny dreadful stocks can have really strong days. And so what I'm going to do today is I'm going to run through some of the FANGs and just have a look at the US market, and then I'm going to have a look at some Aussie stocks as well. So let's just have a look at the state of the market. First of all, the Nasdaq, this is just its chart, churning sideways. It's obviously going to break up or down. If you look at the All Ords, the Aussie chart index, it's pretty much the same chart. Okay, it's just had a correction, churning sideways, tightening in a range, and it's going to break up or down. Now, let's just have a look. So let's just have a look at a few FANGs to start with. So Amazon sitting on its 200-day moving average, looks like it's going to have a bit of a move below that at some stage. This is kind of the biggest stock out there. It's followed by so many institutions. If this has a big decisive break below its 200-day moving average, it's not an overly positive sign. Facebook, above its 200-day moving average. The social media stocks are certainly a bit stronger than some of the other stocks out there. I'll get to a few other social media stocks in a second, but Facebook is still above its 200-day moving average, so that's positive. We move on to Netflix. It's a long way below its 200-day moving average. It's looking pretty weak. There's a lot going on with Netflix, however, that's certainly from a long perspective. There's nothing bullish or positive about that. Where there is money still flowing into is restaurant stocks in the US. So the restaurant stocks, they say things like McDonald's is recession proof, but this stock's been booming in a bull market and a bear market. It's still trending up. Let's have a look at Starbucks. Strong uptrend. I had this massive gap up here on positive earnings, and then it's been turning sideways since in a really constructive way. So Starbucks, a lot of growth potential. And if we move on, the other massive restaurant stock that's doing pretty well is CMG, making all-time highs despite the market going down. So this is what I look for. Stocks which are making all-time highs despite a really weak market. Okay, so there's some of the big leading US stocks. Now, in terms of US stocks, obviously, I'm busy at the moment looking at stocks which are basing and going sideways despite a market that is trending down to sideways. And so I'm looking for relative strength. I'm looking for stocks which are a lot stronger than the market, are really resisting the correction, and therefore, when the market turns, hopefully these ones, will have decent moves. And so, first of all, the solar stocks in the US are showing relative strength. This is probably the leading solar stock, massive gap up on earnings, and now it's basing in a Davis box. Watching that one, ACAM sitting in a Davis box. It's got this, when the market's taking a huge dump, it's on pretty low. This stock is not really reacting on with big volume. It's bouncing straight back. No one's really selling this thing. Another one, LSCC. Gapped up, earnings gap, held that gap, hasn't closed it, and is now at the base in. A lot of people, if we look back here on the 13th of Feb, this thing gapped up, massive volume, and I guess most people probably thought it was too high to buy, and then it's raced up and it was at $10 there, now it's at $20 or $19 or whatever. And what's high often goes a lot higher in the stock market, and what's low goes a lot lower. And so I certainly don't think this thing's too high. If this can just keep forming this Davis box base and then break up and then the market turns, this thing could have a big move. So that's on my watch list. Twitter is forming a really nice base after a nice earnings gap up. This is a very constructive base in a down market. If this can just base, and if we have more down movements in the Nasdaq and in the Dow and in the Aussie markets and the global indices, and this thing just keeps churning sideways and doesn't really care about those down days in the market, let's say the Dow's down 700 one night and this thing's just down on tiny volume and it's down 0.5% or 1%, and then the next day it bounces back. That's the sort of thing that I'm really, really watching for. There's a lot of stocks out there which are showing relative strength, but in terms of the big caps, it's where there's huge institutional money. Twitter is certainly one of them that I'm looking at. The king of all kings in terms of relative strength though is still Shopify. I've been talking about this thing for like 6-7 weeks now. It just keeps making new high after new high. It doesn't really care about a weak market. There's so much money pouring into this thing. So it's made new high last night. If we just look at this on an all-time chart and a 5-year chart, it's pretty impressive. Okay. Alright, so that's a few US stocks. You could talk, there's so many US stocks out there which are just sitting in Davis boxes still. If you just do basic, anyone that trades US markets, just basic Davis scans, it's going to find most of them. And I'm just watching, there's a lot of biotech stocks setting up. Amgen is an example, sitting in the Davis box. Okay, I wasn't going to show it, but we'll just quickly do it. And so it had good earnings, came out, massive 2 big days up on big volume, and now it's just churning in the Davis box. There's a lot else out there, especially the biotech space, biotech, restaurants, and some software companies as well in the US. So certainly pays to watch those. And as far as I'm concerned, the next big up leg, I want my money to be in these stocks which are going sideways now. I don't really want the money to be in the laggards like Netflix. Maybe, I guess, some people would argue it's gone down so much it's going to bounce back a lot, and I don't really see that. I see more stocks that don't really want to go down during a correction and then they just take off during the next bull market. I want to have my money in the strongest stocks, in the strongest sectors, and right now the software stocks in the US, biotech, some restaurants as well. Okay, so they're the ones I'm stalking, and the Davis box scanner really is finding most of them for us. Okay, all right. Now I'm just going to run through some Aussie stocks. Okay, so one stock which Frank's talked a lot about, people have put it on the forum, is BWX. It's broken. It's this huge sideways base. You call that a source, call it a base, call it whatever the hell you want to call it. It's just, they're all the same things, right? They're just bases, okay? And this thing is just finally broken out of this big base on big volume, and now on good earnings, and it's closed near its high, and now it's formed 3 tight days. And so I want, my rules are, to scalp this, I want 4 days of tight closes, unless it breaks out the day after and gives me a second day trade, which I talked about a month ago. And if it can give me 6 tight days of closes, then I'll swing it higher. And so I'm watching that guy. It's got all the characteristics of having an explosive move if it can just consolidate a tiny bit longer than break up through that candle. Okay. EOS I talked about last week or the week before, or the week before that, I kind of forget, but we had a nice big base here, broke up, and now we formed a base on top of a base. The on-balance volume's lovely, the volume's on it's lovely, and this is just an example of a stock showing a lot of relative strength. It's above all its moving averages. When the market has a massive down days, this thing has low volume. It's setting up while the indices are not. And this is one of the only stocks out there that I'm considering, a weekly, a swing position trade for weeks or months or whatnot. Okay, because I like the setup. All right. So now moving on, I discussed this stock that I was interested in weeks and weeks and weeks ago, and I discussed last week how I got stuck in it. I was stuck in it, and it came down, and I was showing a loss, and then we had this day here on the 23rd of August where it just had this massive spike up and huge volume. I bailed out of that day, took a small profit, and moved on from that. It's back down to its support resistance line now, and it's just churning away. So I was happy to get out of that for a profit. It's obviously not the breakout I wanted. It's very illiquid. I mean, today I did $20,000 of stock. That's only 4k worth, and it's just lucky to get a volume day there that did close to 400k of volume, and it gave everyone a chance to bail out. So you get some luck sometimes. GPR stock I talked about last week. Broke out today, so hopefully some of you piled into that. Let's see how it goes. Broke out with some decent volume, and hopefully that's just going to have a nice violent breakout. I've got a first profit target. I've got it written down somewhere, but it'd be around here. But anyway, and so hopefully it's an ascending triangle, so hopefully it reaches its target pretty quickly. But we'll follow up on that one next week. But that broke out today. So LRC's base in, a bit of a wild loose base, but hopefully that can tighten up a little bit. MCR, another one I chatted about last week, is still base in, still setting up on balance volume pretty strong. One that I'm watching on for my earnings gap trades is NAN. Had a massive gap up today in big volume. I want to see this base now for 3, 4, 5, 6 days, and then I can scalp it or swing it on a break above that candle. Another stock that I think is pretty interesting is FLT, Flight Center. So call this a source, or call this a base, call it whatever the hell you want to call it. But at the end of the day, this thing's just gone sideways for a long time, and it's showing signs of breaking up. All this moving, its 200-day moving average is flattening out, and it's about to start pointing upwards. And it's certainly interesting. Now, there are a few ways to get into this thing. If you decide you want to have a crack at this stock, where the hell do you buy it? Okay, and that's there's a few hard things. A, when to buy, and B, when to sell. And so, you can be a breakout trader, and you can just buy a breakout, okay, or you can wait for stuff to break out, then you can wait for it to pull back, okay? And so when you wait for it to pull back, where do you wait for it to pull back to? There's so many ways to do that. Some people wait for it to pull back to a trend line, such as this trend line that's sloping up. Other people wait for it to pull back to moving average, such as a 50 or it's 100-day or it's 200-day. It might never make it to those moving averages, okay? And so there's a risk with every decision you make, and everything's a trade-off. Because all that stuff's so subjective and so hit and miss, I just tend to always keep it the same, and I wait for breakouts. And so now that we've had a move up, this might just be a fake out up, and then it might crash. And so I don't want to buy weakness, I want to buy strength, and I'm going to wait for this to hopefully form a little cup and just tighten up on the right hand side here, and then break up above these highs. If it does that, I'll pile into it. If it doesn't, then I'll just let it fly. Okay. All right, so now I just thought I would run through, just to end, some interesting stuff that I find interesting anyway happening in the oil sector. Okay, I know Frank's talked a bit about Beach Petroleum's breaking up through new highs today. Certainly looking pretty bullish, this stock. Now let's compare that to Woodside, which is at near lows. Maybe it's going to form a double bottom there and have a massive bounce, who knows. But there's no argument that Woodside looks bearish. Okay, it's below all its moving averages. It's trending down. It just looks like crap, right? And there's no argument that Beach looks good. Okay, let's just look at a few others. Look at Santos. It's just turning sideways. It's got massive resistance here in this weekly Davis box setup, and this massive resistance line here. And if you look at it on a weekly chart, it looks great. Okay. However, at the moment, it's just turning sideways. All right. So we'll have a look at one other, Oil Search. Oil Search is in just violent downtrend. So, I just picked out, say, 4 of the main oil stocks, and 2 are looking like crap, and 2 are looking really good. And so let's just go back to 6, 7, 8 weeks ago, whenever it was, when all the gold stocks, were setting up all at once. Okay, we had Northern Star, we had NCM, we had a whole bunch of gold stocks, but all setting up in Darvas boxes and tight ranges all at once. And there was no laggards. There were none that were just letting down the pack. They were all just setting up together. And I spoke back then about how that was such a good sign and how it's such a good setup. And a lot of us went long gold stocks on breaks and did really well from it. At the moment, we have a few oil stocks looking really, really good, and we have a few oil stocks looking really, really crap. And who knows? Who cares? Some people might not care. They might just take the stocks that look good and leave the stocks that look bad. For me, it's about putting the probabilities in my favour and stacking every single thing in my favour. And I can't justify going long in oil stock when the big daddy of all oil stocks, Woodside, is just looking like crap. Maybe the fact that Beachside's breaking up is a leading indicator that Woodside's about to turn. Maybe Santos, Woodside, Oil Search, maybe they're all about to go for massive bull runs. However, I'm not going to bank on it, and the fact that they're not moving together is enough for me to just keep my cash safe in the bank and keep trading the penny stocks, keep scalping, day trading, all the stuff that I like to do, and keeping the momentum, high conviction trades for another day, and wait for perfect setups to come along. Okay, chat next week. Bye.